The U.S. Commerce Department has decided to raise anti-dumping duties on Canadian lumber.
Carney acknowledged that the tariffs will have a heavy impact on sectors like lumber, steel, aluminum, and automobiles.
Canada is the world's largest exporter of lumber, and the United States is majority source for the softwood that they use in home building.
It started with a piece of wood, and now it's shaking the entire U.S. housing market. One of the largest players in the lumber industry just crashed, and it's taken the whole construction supply chain down with it. From the dense forests of the Pacific Northwest to fast-growing suburbs in Florida, Texas, and Arizona, chaos is spreading fast. Prices are soaring. Supplies are drying up. And for millions of Americans, the dream of owning a home is slipping even further out of reach. In a surprising February move, the White House slapped a 25% tariff on Canadian softwood lumber, claiming it would support local production. Echoes of Trump's America First playbook are clear. But from Canada's point of view, this is more than policy. It's a revival of a decades-old feud. And it's escalating fast. That 25% tariff stacks on top of existing fees, a 14.54% countervailing duty, and a 20.56% anti-dumping duty, all based on 2023 figures. Combined, the total tax nears a staggering 40%. To put it in real terms, if a ton of Canadian lumber costs $10,000, taxes alone now add nearly $4,000, about the cost of a premium chainsaw or 2 weeks of groceries for a middle-class family. Multiply that across full truckloads worth $50,000, and the tax adds $20,000 in extra cost, a burden most companies will pass directly to the consumer. The market reacted immediately. Lumber prices jumped 10 to 15% in just 6 weeks, according to U.S. construction groups. That translates to an extra $3,000 to $4,500 just for the wood in an average 2,000 to 2,500 square foot home. For a middle-class family, that money could have paid for a full kitchen setup, a year's worth of heating in Ontario, or jump-started a college fund. Now, it's just the cost of some pine beams. Experts are calling this one of the most aggressive U.S. trade moves against Canada in over a decade. What's more alarming? Washington has refused any negotiation or extension options. The August 1st deadline is final. To many, this marks a shift from flexible diplomacy to economic strong-arming. Yes, protecting U.S. sawmills, especially in the Pacific Northwest, makes sense politically. But launching a tariff war just as housing demand is rebounding? Risky. And Canada's not just pushing back. It's rethinking its entire trade position. Ottawa is now eyeing changes to its export strategy and even broader international policy shifts. So here's the big question. Did the U.S. truly anticipate the ripple effects? Or is this a short-term win with long-term fallout? Because this isn't just about wood anymore. It's a strategic power play, and every move counts. Let's break it down in today's video. Note, this video is an independent analysis based on public sources. It does not represent any organization or political stance. We encourage you to think critically and share your thoughts in the comments. Something big is shaking the timber industry, and it's not just the trees. A company once seen as unshakable, Weyerhaeuser, is now sending shockwaves through the market. As 2025 rolls in, long-time investors are starting to panic. The company just posted a profit of only $87 million for Q2, a near 50% drop compared to last year. That's not just a dip. It could be one of their worst quarters in over a decade. Has the golden era of this lumber giant come to an end? And things aren't looking any better for Q3. Executives are already bracing for another $60 million loss, blaming slow market recovery and climbing taxes. Naturally, investor confidence is crumbling. Earnings per share missed targets, and the stock price tumbled right after the report dropped. This isn't just bad luck. It's a clear sign of deep market anxiety. So what's behind the collapse? For starters, housing demand in the U.S. has stalled. Soaring interest rates, expensive materials, and tighter consumer spending are keeping families from building new homes. And when home construction slows, so does the demand for wood. To make matters worse, lumber prices are crashing. In just a year, softwood prices fell from $520 to $390 per 1,000 board feet, a 25% drop. Yet production costs are holding steady or climbing. Wages, fuel, maintenance, they're all eating into profits. High inventory levels and oversupply are pushing prices even lower. Then comes the hammer blow, U.S. tariffs. The government's 25% tax on softwood imported from Canada, America's biggest lumber supplier, has slammed companies like Weyerhaeuser. They're stuck between raising prices and losing customers or keeping prices steady and bleeding cash. Experts say tariffs are adding $8 to $20 per 1,000 board feet, and when you're dealing in millions of BF each month, that's tens of millions in added costs. Weyerhaeuser isn't sitting still. In a scramble to restore confidence, they've launched a share buyback program, a move analysts say looks more symbolic than strategic. They're also expanding domestic tree plantations to cut reliance on Canadian imports and investing in tech to streamline production. But these are long-term plays, not quick fixes. And here's the scary part. If a giant like Weyerhaeuser is struggling, what's going to happen to smaller companies? The U.S. housing market is clearly under pressure. Policy shifts, material shortages, and global supply chain issues are creating a perfect storm, not just for developers, but for everyday Americans dreaming of owning a home. In May 2025, new home sales hit their lowest point in 3 years. It's not just rural cabins anymore. Construction is slowing even in booming states like Texas, Florida, and California. You'll see more for sale signs gathering dust, more empty lots, and real estate offices that feel quiet. One big reason? The cost of wood. In 2022, framing a standard 2-story home cost about $25,000. Now it's up to $38,000, a 40% increase in under 3 years. That extra cost could have covered a year of college tuition, 3 months of groceries, or a down payment on a car. For many, owning a home is no longer just a financial goal, it's a gamble. Builders are caught in the middle. Projects are being delayed, paused, or canceled altogether. The dream of building a home? For many, it's slipping out of reach. Something is seriously shaking one of North America's biggest timber giants, and it could spell trouble far beyond the company walls. For decades, Weyerhaeuser was seen as a rock-solid name in the timber industry. But as we step into 2025, long-time investors are getting nervous. And for good reason. The company just reported a staggering 50% drop in profit compared to last year, pulling in only $87 million in Q2. That's one of its worst quarters in over 10 years. So, has the golden era finally ended? And the bad news doesn't stop there. The outlook for Q3 is grim, with projected losses of another $60 million due to sluggish market recovery and rising taxes. Confidence is fading fast. Earnings per share fell short of expectations, and almost instantly, Weyerhaeuser's stock took a hard hit. This isn't just about one bad quarter. It's a sign of growing unease in the industry. So what's behind this financial freefall? A mix of harsh realities. Slowing home construction in the U.S., skyrocketing material costs, high interest rates, and cautious consumer spending. As demand for new home stalls, so does the need for timber. And wholesale lumber prices are tanking, dropping from $520 to $390 per 1,000 board feet in just 1 year, a 25% loss in value. That's devastating for profit margins. Worse still, production costs haven't gone down. Wages, fuel, and maintenance keep climbing. Companies are being squeezed from both sides. Selling prices are dropping, but costs keep rising. Then came the gut punch, a 25% U.S. tariff on softwood lumber imported from Canada, a key supplier. This alone could add tens of millions in extra costs to Weyerhaeuser's operations. Companies are stuck. Raise prices and lose customers, or absorb the cost and bleed money. Either way, it's a tight corner. In response, Weyerhaeuser tried to fight back. They launched a share buyback to boost investor confidence. They announced plans to expand domestic timber plantations to rely less on Canadian imports. And they're investing in tech to streamline production. But none of these fixes will work overnight, and time may not be on their side. Now the bigger question looms. If a titan like Weyerhaeuser is in trouble, what happens to smaller timber companies? This could be the start of a much bigger shift. The U.S. housing market is entering unfamiliar territory. Policies, rising costs, and shaky global supply chains are colliding, squeezing not just businesses, but everyday people. In fact, May 2025 saw the sharpest drop in new home sales in 3 years, a warning sign flashing across the market. Even booming states like Texas, Florida, and California are feeling the pressure. Homes are sitting unsold. Projects are stalling. Offices are quiet. Why? Because the cost of building is soaring, especially lumber. In 2022, it cost around $25,000 in wood to build a standard 2-story home. By mid-2025, that number jumped to $35,000 to $38,000. That's a 40% increase just for the frame. For many families, that extra $10,000 could have been tuition for their kids, months of groceries, or even a car down payment. The dream of owning a home isn't just expensive, it's starting to feel impossible. Contractors are delaying projects. Some are canceling contracts altogether. And as pressure builds, everyone from lumber suppliers to first-time homebuyers is caught in the storm. Weyerhaeuser's struggles might be the first crack, but the ripple effect could reach across the entire economy. This was just the beginning. Hit that subscribe button and buckle up. Digital Garage has so much more in store.